My name is Jake, welcome to the channel. In today's video, we're going to talk about 5 mistakes every dividend investor should avoid. Now, I wish I would have seen a video like this 10 years ago. If you're new to investing and you're watching this video, kudos to you. I've been sharing my journey to financial independence here on YouTube for 5 years. I just reached what is called Barista Fire last year at the age of 37. So if you're new to the channel, that's a little bit about me. And I'm really excited to share that this video is sponsored by Snowball Analytics. So more on them later. Now, I've been investing since I was 21 years old. And in my investing journey these last 17 years, I've made every single one of these mistakes that we're going to talk about in today's video. And my hope with this video is that I can help someone out there to not make the same mistakes that I made. So whether you've been investing in a dividend strategy for years or if you're brand new, it can be really exciting when you first discover dividend investing. I remember myself when I first learned about dividend investing and that light bulb went on and I got so excited that I no longer had to, worry about selling my portfolio in retirement, but rather I could actually live off of the income from my portfolio. So if you're a brand new dividend investor, I want to send out a warm welcome on behalf of the dividend community here on YouTube. And that warm welcome, it could look a little like this.
Initiate Aaron! Approach! Kneel. By the right of counsel, by the will of the force, I name you Jedi Apprentice. Rise and speak your name.
My name is Jeff.
Yeah.
Woo!
Yeah.
All right.
Oh my gosh. Oh man, let's not take ourselves too serious here now. Oh man, I wish that I had an initiation like that when I first became a dividend investor. Oh man. All right, cool. Anyways, the 5 mistakes that you want to avoid if you're a new dividend investor or if you've been investing in a dividend strategy for a while. The very first thing is when I was thinking about this list, what are 5 things that I could share with somebody? Maybe we're sitting down together in the same room, and if you were sitting down next to me, these are the things that I would tell you. So the very first mistake is listening to the naysayers. Many of you out there watching this video have a dream of one day living off of your dividend portfolio. This is the exact same dream that I had many years ago. When I first started down this path of pursuing financial independence, there were people around me who did not share the same enthusiasm as I did. At first, when I would tell people that I'm pursuing financial independence with dividend investing, some people would look at it and they would say, oh, that's nice, but you probably should have a plan B because it likely won't happen. That was really discouraging for me at first. It would have been very easy for me to just listen to those negative people and accept the fact that I wouldn't be able to accomplish my dream of reaching financial independence with dividend investing. Thankfully, I was too stubborn and didn't listen to the naysayers.
Don't listen to the naysayers. Everything I ever did, the thing that I heard out of people's mouth was, that's impossible. That can't be done. Or no. So whenever someone said to me, it can't be done, I heard, it can be done. And when they said it's impossible, I heard, it is possible. Maybe it has never been done before, but I'm gonna do it. And I did not listen to the naysayers.
The second mistake is investing for the wrong time horizon. Now this comes down to not understanding your why. Why are you investing? I'll give you an example. Investing into covered call ETFs. These are very popular here now on YouTube. If you're not planning on retiring in the near future, say, the next 5 years, it really comes down to not understanding how compound interest works or the rule of 72, how quickly your investment is going to compound and grow. When you first start learning about dividend investing, it can be easy to make the mistake of just randomly investing into different stocks or ETFs simply because you like the dividend yield or the company in general. If you want to be successful at dividend investing, you have to understand your investment time horizon. Let me give you an example. When I first started investing for my financial freedom, this was years ago, I started looking at dividend stocks with the highest yields, the highest dividend yields, like, with AT&T or Verizon. At first, it never occurred to me that these were not the right investments for my investment time horizon. It felt as if I was investing blindfolded. So, when I was first starting out, I would filter, lists based off of the highest dividend yield because I thought, well, to be a dividend investor, you got to start there. I didn't understand that that wasn't how you do it. I wish that there was somebody out there that would have told me that that's not how you do it. I would go and I would read articles, I'd watch YouTube videos, and they would talk about the best stocks to buy now and all of that kind of stuff. It didn't help me to understand how to invest for my particular situation. Okay, so make sure that you avoid the mistake of investing for the wrong time horizon. Now, if you don't fully understand what I mean by that, and if you're brand new, go and check out some of my videos on where I talk about how to invest based off of your investment time horizon. I promise you, it will help you so much. The third mistake to avoid is not tracking your progress. I love this quote from Mark Twain: "The secret of getting ahead is getting started. The secret of getting started is breaking your complex, overwhelming tasks into small, manageable tasks and starting on the first one." The point of this is taking a complex problem and simplifying it. Have you ever heard of that saying, you don't want to swallow an elephant whole, you want to break it down into bite sizes? And that's what I'm talking about here with not tracking your progress. When I first started investing when I was 21 years old, I struggled to track my progress. Other than just the amount that I had invested, I didn't ever look at anything other than the value of my portfolio. As I started focusing more on dividend investing later in life, I realized that there was a lot of important metrics that I was overlooking. A lot of new dividend investors make the mistake of ignoring the key metrics around your portfolio. You want to make sure that you're not just tracking your dividend income, but also looking at key metrics around your goals. This kind of ties in with how to invest based off your investment time horizon. Now, this can be the weighted average portfolio dividend growth rate, your portfolio yield on cost, when you will be getting paid your dividends, and so much more. However you end up tracking your portfolio is up to you. There's a lot of great ways, there's a lot of great tools. There's actually one that I've been using for a while and one that I want to talk to you about today. And I'm excited to tell you about today's sponsor, Snowball Analytics. Snowball Analytics is a dividend tool made for dividend investors. The most important data points a dividend investor would be interested in are provided in Snowball Analytics. The first thing that I want to highlight is how easy it is to upload your portfolio. So whether you have M1 Finance or a European brokerage or a US-based brokerage, you can link your portfolio. Now, once you've connected your brokerage into Snowball Analytics, what you'll notice, you'll have a few different things that you can take a look at. The first thing that you'll see here is you'll see an overview of all of your individual holdings. The very first thing is it shows me what my current portfolio yield is, but more importantly for me, what it shows me is my yield on cost, the yield that I have with the money that I invested. So if you're a dividend investor, this is one of the most exciting things, is understanding your yield on cost. The next thing that I think is very valuable is the dividend safety score or the dividend rating. You will have that incorporated into Snowball Analytics. One of the biggest advantages, in my opinion, is you're getting multiple tools with one platform. There's a lot of other services out there that have, maybe just a dividend calendar or just the dividend safety score, but they don't really offer anything else. That is one of the things that I like about Snowball Analytics is you're getting multiple tools in one single platform for a single price. Another feature that I like using is the dividend calendar. Now, if you don't have M1 Finance, and let's say you're maybe in Europe and you don't have a tool that offers this, or you don't have a subscription to another service, well, you're going to have this in Snowball Analytics, and you can see when your dividends are going to be paid. You're going to see what the dividend yield is. You're going to see how much you're going to be paid. So that's pretty cool. Let's say, for example, here in September, I'm going to get almost $300 from J.M. Schmucker, $81 from Honeywell. Another thing that you can do is you can actually type in a few tickers and you can see when the company is going to pay a dividend. So if you wanted to create a monthly dividend, well, you could invest into BTI, Pepsi, and Coca-Cola, and essentially you're creating your own monthly dividend. I've decided to partner with Snowball Analytics because they actually understand what's important to the dividend investing community. I negotiated an agreement with them to give you the very best pricing when you use my link. I requested to be paid less so that I could offer a better discount to you. So whenever someone signs up with my link, I get a small percentage of that because it is an affiliate link. I requested that they pay me less and give people cancel a higher discount if they use my link. So I hope that you get as much value out of it as I have. If you already have an account with Snowball Analytics but don't have a paid subscription, you can use the promo code DGI and you'll also get the discount. So you can use my link. It's in the description of this video. Thank you again, Snowball Analytics, for sponsoring this video. The fourth mistake to avoid is investing in stocks you don't understand. One of my favorite teachings from Warren Buffett and Charlie Munger has been around investing in what you know, investing in your circle of competence. Let me give you an example. When I was first building my dividend portfolio, I would look at stock screeners and only add stocks to my portfolio or my watch list that looked good on paper. For example, only stocks with good dividend yields, high growth rates, and years of dividend increases. Now, I'm sure there's many of you out there that can relate to this. I quickly found out that I knew nothing about some of these businesses, and when their stock price would crash, I would often find myself stressing out and in some cases selling out of them. At the end of the day, I didn't understand some of the companies that I was investing in, and it really proved to be the wrong choice when the market was crashing. When the market was up, I felt like the smartest person ever. You learn about your real circle of competence when the market is going down, not when the market is going up. I've learned over the years that my circle of competence is understanding that I don't know as much as I think I do. I'm able to realize that I have a better shot at hitting the sun with a snowball than picking all the right stocks. That is why I focus on a core portfolio of ETFs and build around them with a few satellite positions that meet my goals. This is what is called the core and satellite approach to investing that I talk about on my channel. The fifth mistake to avoid is not considering taxes. Talking about taxes is probably the least sexiest topic about finance, but it can be one of the most important topics if you're serious about building wealth. You have to understand how your dividends are taxed. You have to understand what is a qualified versus a non-qualified dividend. You have to understand about return of capital if you invest in cover call ETFs or some of these high dividend pipeline companies. Most new investors only think about what they're going to invest in, whether they're going to invest in a growth stock, a growth ETF, a dividend stock, or a dividend ETF. And most new investors completely overlook where they're going to invest their money. It's not only about what you invest in, but where you invest your money. Here in the United States, we have a lot of options of where we can invest our money. We can invest them in a Roth IRA, a Roth 401k, a traditional 401k, an HSA, a regular taxable brokerage account. It's like going to Baskin Robbins. When you have so many options, so many different flavors to choose from, it can make the choice very complicated and very difficult. So when you're thinking about taxes, don't just think about what you're investing in, but also think about where you're investing your money. And this is the same whether you're in the United States, in Canada, in Europe, or anywhere else. It's important to understand not only what you're investing in, but where you're investing. Taxes can work for or against you. Let me share a personal example. My biggest mistake with taxes was waiting until I made a lot of money at my day job to start learning about taxes. While I was working at lower paying jobs, taxes were never on my radar. I wish that I would have learned about the importance of taxes and how to optimize them earlier in life. It would have saved me a lot of surprises, a lot of shocks down the road. I mentioned at the beginning of this video that I wish I would have came across a video like this when I first started learning about investing. I had to learn all of this through trial and error. I made every single one of these mistakes. I hope that you can learn from my mistakes. But I want to say that for those of you out there who are maybe new to this, are just getting started and you're feeling discouraged, I want you to know that you're not alone. Everyone who starts down this path and is trying to accomplish something that feels larger than life, you're going to have doubts. You're going to have people tell you that it's not possible. You're going to read nasty comments of people saying that your idea is stupid or it doesn't work or it's irrelevant or you're an idiot, and just understanding that it's just noise. The last thing that I want to leave with you here in this video is don't listen to the naysayers. If I would have listened to all the naysayers back years ago, I would have never created this YouTube channel. I would have never taken a risk on anything, and I would have just stayed in place where I was. And for all of you out there who are on the fence or are doubting yourself, I promise you, in 5, 10, 20 years, when you look back on your life and you look at the sacrifice that you put in to achieving your dream or your goals, that you will be amazed at how far you've come. But it starts with not listening to the naysayers.
Please subscribe Subscribe.
Please subscribe.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.